is how to trade news events. And some of you have asked me questions before about how to trade news. I know some of you are very avid news traders. There's a couple different ways you can trade news, and we're going to talk a little about that tonight. And I'm going to briefly cover 4 different ways to trade news. I'm going to kind of just run through 4 different strategies and systems of how to trade news. 2 of them will be using binaries, and 2 of them will be using spreads. So we're not going to have a lot of time to dig into each system and answer a bunch of questions about them, or you know, completely go over a chart review and entry exit rules. I'll show you where you can go on our site to get more details of each one of these. So I'm going to go through kind of 4 of them, show them to you, and then I'll show you as we go through each one where you can go to get more information if you want to dig in and watch a full video just on that particular strategy or system, so you understand the charts and the indicators and what to look for and entry and exits and all that. Just going to be kind of an overview tonight, and then I'll show you where to get some in-depth. So let's get started here and knock out what we need to knock out. Let's get our disclosures done. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. The information here in this webinar is the sole property of Apex Investing. It may not be distributed without written permission. Any trading decision you make is your sole responsibility. Contents of this webinar are not an offer or a solicitation of an offer to buy or sell any financial instrument offered by Nadex, and past performance not indicative of future results. So, speaking of Nadex, hop on over to nadex.com. You can go through and get some information about Nadex. They basically offer 2 different products. We're going to talk about both of them tonight. They offer binary options, and they also offer what they call spreads. Okay, so you can go through either one of these tabs here to get some basic information about that. I want to draw your attention right here to the trading tab. Second one down, demo trading platform. If you don't already have a demo account with Nadex, definitely get one. Get one right now if you don't have one. All you gotta do is select a username and then fill out some brief info and hit submit, okay? And in just a moment, you'll get an email from Nadex with a temporary password. You'll be able to log into a demo account. Nadex will give you a $25,000 demo account that you can play with to get familiar with the Nadex platform. I'll show you that here in just a moment, okay? Also, I'm gonna show you on a different news calendar where you can get some of this information. But if you scroll to the bottom of the page, right here, holidays and hours, you'll be able to read up on the Nadex holiday schedule as far as what days they are closed, and you can go through and look at the actual guidelines. And if you log into your live Nadex account, you'll also have a little pop-up that will show you exactly what times the markets are closing Wednesday, exactly what which markets are ending early. You know, also keep in mind, if any of you do trade like the weekly binaries, for example, that would normally expire on Friday, definitely check that out, because a lot of those will be expiring on Wednesday instead of Friday, because that will technically be the end of the week, okay? But once you get your Nadex demo account, you can log right in, use the demo account to get familiar with the platform, go through the different instruments and products that Nadex offers, understand some of the time frames they offer on those, get familiar with entering and exiting order tickets, and you can do that all with your demo account. All right, Nadex will give you a demo account, free demo account for 2 weeks. Once you open a live account with Nadex, and it's a minimum of $100 to open an account with Nadex. Once you have a live account and you've placed 1 live trade with Nadex, you can give them a call and they will extend your demo account for 1 year, okay? Doesn't matter if that's a $200 risk trade or a $2 risk trade, doesn't matter, just 1 live trade with Nadex, and they'll extend that out for you, okay? So hop in, get a demo account, make sure you have that to play around with, also to test out any new strategies or systems, especially if you want to test out any of the new systems that we're going to be covering tonight, okay? All right, so next from there, what you want to do, my name is John Skelton. I'm with apexinvesting.com. I'm not with Nadex. Nadex is an exchange. Apex is an online community of traders helping traders. All right, we're 2 separate different companies. Okay, if you hop on over to our website, apexinvesting.com, you can go right here to join free now. Totally, absolutely free to sign up, no credit card or anything like that. Sign up, create a free username and password. All right, once you have that, you can log into our basic site here. And with your basic free membership, it'll give you access to literally hundreds of hours of free education and some free trading tools. And a very important tool that I want to show you here that we're going to be covering tonight. Once you get to our website here, right here under the News tab, all right, you go to News, click right here for News Trading Plan. All right, we're going to talk a lot about this tonight because our subject is how to trade news. But this is a total free tool to you. And each week we go in and on this calendar we input all of the major news announcements that are coming up that you need to know about. Now, this is not every single news release and press release in the world, obviously. These are the ones that historically we feel you need to know about because historically they've had an impact on the market, all right? And they're broken down by each day and time. Now, some of them will just say, be aware. Well, what does that mean? Well, you can click on any of these and it'll open up a tab, all right? This just says, hey, be aware the Eurogroup meeting's on Monday. All right, well, you're like, okay, what does that mean? Or this one right here, be aware of the Euro-French Flash Manufacturing Service PMI news on Monday at this time. Okay, well, if something just says be aware, it doesn't have an actual trade plan next to it, what we're saying there is, hey, this news announcement's coming out, doesn't really have much of an impact on the market, doesn't normally historically have cause the market to move in a big way. It's not necessarily a tradable event, but right as it comes out, it could move the market or do a quick spike in the market come right back. You just need to be aware that it's coming out. Let's say that you're trading Nadex binaries and they're about to expire. Well, if you're a binary trader, you know that just 1/10 of a tick below or above your strike, depending on if you're buying or selling, can mean the difference of a win or loss on that binary. So even though it might overall not have a real big effect on the market as far as making it a tradable event, it could have an effect on your binary at expiration. All right. So if you're in a binary trade and you're trading, let's say the euro dollar or something, or the dollar franc, that might be affected, directly by euro or French news. Well, maybe you want to tighten up your stop. Maybe you want to get out of it a little bit earlier. Just something you want to be aware of. Okay. But then you also see some trades like right here. This right here says iron condor. Okay, well, what does that mean? Let's click that one. Well, the USCB Consumer Confidence and Richmond Manufacturing Index news is being released at 10 a.m. on Tuesday, the 24th. We're looking to find an iron condor on the euro dollar on Nadex, entering as early as 9 a.m. with an expiration of 11 a.m. for a minimum profit of $25 per iron condor. All right, that's an actual trade recommendation. Okay, and you can go through and look. There might be times where there's not a ton of news this week with the holidays, but sometimes they'll say iron condor, sometimes they'll say straddle, sometimes they'll say strangle. Okay, and these are all Eastern times on here. Everything is Eastern time, just like everything on Nadex. All right, so not a ton of news this week because of the short week, but most weeks you'll pop on here and you'll see that there's a couple of iron condors every day. Sometimes there's a straddle, there's a strangle. This is all free for you to use. Okay, and this is a great tool to plan your trading around. All right, to be able to know ahead of time what's coming up, what days. Let's say that you're a part-time trader. We've talked about this a lot in the past. Hey, I'm a part-time trader. I have a full-time job, but I want to trade on the side. Okay, and I want to trade at night, but I can't trade 5 nights a week. I do have to have a life. I do have to spend time with my family. I have other things to do, but I could trade 2 or 3 nights a week. Okay, and then you just randomly pick certain nights to trade, right? And you might be sitting there those random nights and nothing's going on. And you feel like, oh, I wasted a night. I wasted 2 or 3 hours here in front of the computer and my husband or wife's going to be mad at me. I took time away from the family. Nothing happened. And the next time I chose a night, nothing happened. Well, this is a great tool for you right here. Okay, because you can go through and say, all right, yeah, I want to trade a couple nights this week, but I'd like to trade on a night where the market's moving, where there's something going on. Okay, and you can look at this to plan ahead and plan your week. Say, hey, this particular night, there's really nothing going on. Okay, but like, well, Monday night, not a whole lot going on. There was some morning news, but hey, Tuesday night, 6:50 p.m., there's some Japanese news coming out. At 7:30, there's some Aussie news coming out. All right, maybe that's the night I want to trade. Okay, or oh, there's this other night where there's an iron condor trade recommendation and there's this news going on. Okay, so I want to pick those nights to trade when there's something going on. That way, when I have very limited time, I can make the most of it. Okay, so that's one great way to use the news calendar is when you are a part-time trader. Even if you're not a part-time trader, just at night, and you can only trade in the morning. For example, we have a lot of people that do have full-time jobs and they do want to trade a little bit part-time, but they don't want to do it at night. They'd rather get up a little earlier in the mornings to trade before work. I know some traders that get up at 3 or 4 every morning to get up before work, and they want to trade the European session. All right, well, again, who wants to get up that early and not know if something's going on? Well, but if I can look here and say, okay, 4 a.m., there's some Euro news going on. Okay, great. Or if I can say, again, 4 a.m., some Aussie news, some Euro news. Okay, I'm not going to go get up early on a morning that I don't know if something's going on. I'd rather get up the mornings I know that there's news coming out that might have an effect on the market that's actually tradable. Or even if I'm a full-time, daytime trader, I know what news is coming up. I know when to watch out. I know when to select my strategy or system. It's all great information here, okay? And right underneath this calendar, if you scroll down, got a couple of great videos here, right here. Whole webinar on how to trade news events. Different ways to trade news events. Some of the stuff I'm going to cover tonight. There's also some additional information in here about how to use some different Apex indicators and tools that we offer to some of our members. How to take advantage of the calendar. Some of you are saying, okay, well, that's awesome, iron condors, and yeah, Norman, I'm seeing a ton of them all over the place. What's an iron condor? Well, we're going to talk briefly about it tonight, but then right underneath here is step-by-step iron condors on Nadex spreads. Also, at the end of the webinar tonight, I'm going to let you know about some special upcoming events where we're going to, over the next week here, have some new education and training and some special events about iron condors and some new advanced iron condors as well, okay? So some great information here. Take advantage of this. We're going to reference this a couple more times tonight as we talk about news. But back to our website here, some other good information under the Binary Essentials tab. The third step down is Trading System Courses. We've got Sharpshooter, Binary Hunter, 5-minute binaries, binary strangles and butterflies. I'm going to reference this again later because we're going to briefly cover these. Some great step-by-step training courses and webinar videos here about several different ways that we trade Nadex binaries. And you feel free to go through and check some of those out, see which one, kind of best fits your personality and trading schedule. And then under the questions tab, Trading Questions Forum. A lot of good information here. And go through the forum here. We've got some good articles about trading, some good information about trading psychology and risk management. You can scroll down here. It's kind of broken down into sections, S1, like section 1, section 2. If you go down to section 10, again, that's systems. You can go through and see all kind of information about our different systems, videos, screenshots, step-by-step rules, kind of some back and forth discussion with other traders. But if you go a little further down, you'll see watch webinars here. All right, this webinar that we're doing tonight is being recorded. I'll have it up in about an hour after our webinar is done tonight, and it will be posted right here under the newest webinars section. And if you've missed any of our, past few weeks webinars, you can go back and watch them here. You'll see a Monday Nadex webinars, how to start day trading, picking the right spreads, directional trading, all kind of great information that's free for you to use and free for you to access. But also in the same section, you'll notice that there's a whole Nadex binary webinars, Nadex spread webinars. So if you're trading Nadex binaries or spreads, you click on either one of these. Just a library wealth of information here. In the money and out of the money strategies, nighttime strategies, strangles and butterflies, scalping with 5-minute binaries, just a ton of information you want to take advantage. Yes, Marcia, this is totally free for you, okay? Yes, over at the Apex site here, we do have a couple of paid memberships, that give access to some members to our live trading rooms and some of our charts and indicators and systems? Sure. But all of the training and education, all the information I'm showing you, the calendar, the free trade plans on the calendar, all these training courses, webinar, all free. All right. All you got to do is go in there and create a username and password. You don't need a credit card, nothing. Just create a username and password. You've got total access to all of this. Okay. You can go right here to this weekly webinar schedule and click it. And you'll see we do these webinars every Monday night for Nadex at 7 p.m. Eastern Time. You can join us on those anytime. We normally do some Thursday webinars as well for our Apex members that you're totally welcome to be on and register for free as well. Do a couple of radio shows with TFNN during the week covering strategies and systems. You'll see Daryl doing live trades on the radio. All this education information is totally free for everybody. So yes, Marsha, absolutely. So take advantage of that. Again, go to apexinvesting.com, select a free username and password. Okay. Also, hop on over to facebook.com/apexinvesting. Like us on Facebook, follow us on Facebook. We post a lot of good information on here as well for new strategies or systems, new webinars coming up. I'll tell you about this kind of more towards the end. We're going to have a little special offer coming up this weekend over like Black Friday and Cyber Monday. A special membership offer for some people. This is also where we're going to release some information about when we're going to do some of the advanced or the new Iron Condor training and offer some access to a brand new advanced Iron Condor system as well. So definitely like us on Facebook, and that way you'll get the event notifications so you can see what's going on here. Okay, so check that out. And if you have any questions, just let us know. If you're on our website, if you have any type of questions about the website or membership or anything technical, you can hit us up right here on the online chat, okay, and ask a question. Or under the questions tab, you can post a question in the forum. Or right here under help desk, just submit a new help desk ticket and we can get that answered for you. Okay, so David, if you don't mind, I believe Austin's on. If you can ask that question that you're asking there on the online chat, he can get that taken care of there for you. Okay. All right, so let's move forward here because we've got a lot of information to cover, and I don't want to keep everybody too late. So we're going to talk about tonight how to be aware of upcoming news, how to plan ahead for news, learn how the news has an effect on the market, how you can utilize Nadex products for news trades. Okay, so I showed you our news trading calendar. You can see ahead of time what's coming out, what time it's coming out, and you can see what trades we recommend for that particular news event. Because a lot of people think, hey, there's some news coming out, the market's going to fly 300 points, so I'm going to go buy all this cheap stuff. Well, sometimes the news has very little impact. Sometimes it has a huge impact. Sometimes it has no impact at all. Okay, so I can tell you the first place you'll go wrong, okay, is to have an over expectation or an under expectation of news reports. And some people say, hey, I saw this great news trading strategy where you buy a cheap little binary and you sell a cheap little binary. Well, that's called a strangle, and I'm going to show you that here in a little bit. You don't want to just automatically go and do that on every single news event coming out, because the market will not always move enough to make that profitable, and you'll just be throwing away money. Okay, that's why I'm going to show you 4 different ways to trade news. All right, some of them have to do with, hey, when it's a big event and the market is moving a lot. Another way to trade it is how we can collect premium when the market's not going to move that far. And I'm going to show you how we can do both. And the best way to know how to do either one is to look at that news calendar. All right. If the news calendar says be aware, then just be aware. If it says Iron Condor, you want to do an Iron Condor. If it says do a straddle or a strangle, you'll want to do that. But I want to kind of show you what that is. But there's a lot of news events that come out. Some of them can be earnings reports from large corporations that can affect some of the stock indices, you know, the Dow, the NASDAQ, the S&P, the Russell. Some of them can be weekly inventory reports. Like every Wednesday, the weekly oil inventory report comes out. Every Thursday, natural gas report comes out. It can be stuff from the Federal Reserve about interest rates. It could be the FOMC. It could be unemployment. There's all kind of news that is constantly being released by the government and by corporations that can affect the different markets. Okay, so there's always something to trade. And again, the nice thing about trading news is, sometimes with the markets, we have no idea what the market's going to do. Well, the same thing with news. We don't always know what news is going to do, but we at least know that at certain days and times, there's an event happening, there's a news release happening that does have a possible effect on the market. So again, if I have to be selective in the time I can trade, sometimes I might want to plan to trade those news times, okay? And like we said, depending on what kind of release it is, it could affect. Sometimes news only affects one thing, all right? I mean, sometimes like the oil inventory report that comes out, it may only affect oil and natural gas, say. It might not necessarily have a huge effect on, the pound yen or something, or on one of the stock indices, all right? Or you might have certain news, earnings report from a certain company that might move the Dow, but it's not going to move the Russell or the S&P so much, all right? Each news event affects something different, and that's another reason that on the news calendar, for example, we will specifically say what to trade, okay? Like, for example, remember when I showed you here, like right here, Euro-French flash manufacturing services. Okay, well, some people might say, well, because it has to do with France, should I trade the, the Swiss franc, because it's also in Europe? Should I trade the pound because it's over in, European area? Like, what do I trade? Should I do the pound yen? No, we specifically tell you. Okay, oh, not that one. I'm sorry. This one. I'm sorry. What to trade? The euro dollar. Right? Yes, it can move certain other things, but historically, the euro dollar is affected the most by this particular news event. Okay. Or, for example, I think we had another iron condor right here, U.S. new home sales. Okay, well, new home sales. Well, what would that affect? Is that going to be a stock index that it would affect? Would that be like I need to try to trade lumber futures, like a commodity because of, lumber that's traded for, building new homes? Would that affect oil because, oil makes gas and, all these natural resources to build a home has to be transported from one place to the other. So gas, is that what I should trade? Like, what is this news event going to affect? Well, historically, has the most effect on, boom, euro dollar, an FX pair, okay? Or if it was a certain, like I said, a release from a particular company, like an earnings report, it will tell you on there which stock index that company is listed on. So that's the one you want to trade. It's another big key for news trading is I've talked to a lot of people that, hey, I want to trade news, but my thought process was, just like the example I gave you with new home sales. Well, I figured that would affect lumber, which is a commodity, and, a lot of things required to build a home require, they're oil-based, so I figured it would move oil. It doesn't. What it moves is the dollar index. And the best one to trade for that particular news event is the euro dollar. Okay? So I know that's been another frustration from people trading news is, well, what do I trade? Even though this is coming out. Okay? So sometimes news can have a big impact on the market and move the market quite a bit, and it can create directional trading opportunities, all right, where we want to try to take advantage of the big move of the market. Problem is, a lot of times, we don't know what that news is going to be ahead of time. It's hard to determine the direction of the market. Hey, when this news event comes out, the market may fly up 100 points, or it may go down 100 points. Do I want to just listen to what they say on CNN and these random people on Fox News who say totally something different from the guy over at CNBC? So I just got to take a guess and I'm going to buy, and I was wrong, and it went against me. Or I'm going to sell and it went up, I was wrong. I'm always seem to be wrong when I try to go directional with the news. Well, and then some people say, well, I'll just wait till right after the news and see what the market's doing, then I'll hop in. Well, sometimes it can move super fast and you get in too late, or the pricing's not great after the news event, or there's, IV built in that affects the pricing. It is hard ahead of time to know how to trade the news directionally. Sometimes small impact news can create what's called a range-bound opportunity, meaning yes, the market will move, but it's not going to move a whole lot. Or the market may move, let's say it jumps up 30 or 40 points. But hey, historically, this particular news event, right when it comes out, will cause the market to jump 30 or 40 points, but then within 20 or 30 minutes, the market makes a 50% retracement back down to where it was. That's what we call a range-bound trading opportunity, where, hey, the market's going to spike up, but then it's going to retrace back about halfway. So it's going to kind of stay within a certain range. All right, how can we take advantage of that? Well, we're going to talk about that. Okay, we're going to talk about range-bound trading. So, again, there's various news outlets and websites you can go to keep up and monitor news. You can look back historically and look years back at, hey, what kind of, and that's how we do the news trading calendar, is based on our own historical trades and our own experiences logged down and researching past history of these news events. What does each one of these news events, what kind of effect does it normally have on the market? How many points does it normally move the market? How long does it take historically to normally come back into a range bound? And that's how we determine for that news calendar what trade recommendation there is for each one of those trades. It's not just some random thing thrown out to you that we're just saying, go trade this. There's actually an art and a science behind it of looking back historically, mapping out which ones are worth trading and not, and then which ones have a big enough move to warrant what type of trade. Okay, so like I said, normally it's hard to know ahead of time which way to go. Expectations are normally wrong. Yep, people on the networks are always seem to be behind the curve, or always, they're almost always wrong. It's like if you want to bet directionally on the news event, go the opposite of what they're saying on the news, right? So with large moves, let's talk about news events that have large moves, okay? And again, this will be noted on our news calendar, but I want to walk you through 4 examples here. So we're going to start with 2 examples. These first 2 I'm going to show you, these have to do with, hey, when it's a large move of the market, when there is a big move expected, we just don't know if it's going to be a big move up or a big move down. How can we still take advantage of it when we don't know the direction? Well, what we do there for a large move is we go both ways. We buy and we sell. So we don't know if it's going to go up or down, but we want to get in ahead of time. So since we don't know which way it's going to go, we're going to go both ways, okay? And the way we do that with Nadex spreads is what's called a straddle. The way we do that with Nadex binaries is what's called a strangle, okay? So like I said, I'm going to show you 4 ways tonight, 2 with binaries, 2 with spreads. Since we've got a lot to cover, I'm not going to jump in crazy to review the entry and exit rules. I won't be able to take a lot of questions on each one of these because we got to kind of breeze through them. But I'll show you on each one as I cover it where you can go on our site to watch a full video or training just dedicated straight to that particular system. So let's first of all talk about a binary. All right. Does everybody on this webinar, we've talked about this a lot, does everybody in this webinar know what when I say OTM, that means out of the money? Does everybody on this webinar know what an out of the money binary is? If any of you on this webinar do not know, just type in the question saying, hey, I don't know what an out of the money binary is. All right, I'm going to do a real quick example here for you. All right, if you're looking at binaries, okay, I'm just going to real quick do a quick walk through this. That way it all makes sense here. We're going to pull up the euro dollar. Okay, so, all right, if we pull up the euro dollar binaries for 9 p.m. expiration tonight, as you see, we've got a bunch of different options here. Each one of these prices right here. This is a strike price of a binary. There's a bunch of different strikes. I can choose which one I want. What is a binary? All a binary contract is, like if I open this up, this is a binary contract. What does it say? That the euro dollar will be greater than 1.0639 by 9 p.m. That's it. That's all a binary is a statement, okay? A binary contract is a statement. The euro dollar will be greater than this price by this time, okay? So euro dollar be greater than 10639 by 9 p.m. If I say yes, I think that is true, it will be greater than that. If I say yes, then I want to buy it. Saying yes. If I say nope, I don't think it's going to be true, I think it'll be less than that, then I'm going to sell it. So I'm basically saying yes, true, no, false. That's a binary contract, okay? At expiration, a binary is either worth 0 or worth 100, okay? So if I say yes, look at another one. Let's look at this one right here. If I say yes, I think the euro dollar will be greater than 0635 at 9 p.m. I say yes, I want to buy it for $55. And if I'm right, and at 9 p.m. it expires above that, then I bought it for 55, boom, it's worth 100. Made 45 bucks on it. Okay? If I buy it for $54 and I'm wrong, it's not greater than 9 p.m., then it's worth 0. And I lost that $54 at expiration at 9 p.m. Now, I can get out of it early. I don't have to take a full loss, or I don't have to take a full profit. I can get out anytime, okay? But that's it. That's all a binary contract is. So if you notice, there's different binary strikes, okay? There's different levels to say yes or no, the market will be over or under. This one right here, 10635. Notice where it's priced. What is it priced around? On the buy side and sell side, about an average of about 50 bucks. Well, where is the market right now? 0634. So what we're saying here is the market will be above 0635. Right now it's right at 0634.5. Like the market's basically right there on the fence, right? The underlying market and the strike price are almost the exact same. That makes sense? So that's what we call an at the money binary, because currently right now it's right there. So it's kind of like a 50-50 thing, right? Depending on what happens, it might end up being worth 0. It might end up being worth 100. It's kind of right on the fence. That makes sense? Okay, that's an at the money binary. What about this one? Why is this one right here priced at $85? Well, because this statement says the euro dollar to be greater than 10627. Well, where's the market right now? 0634. So this statement's already true, right? If the market, if it was 9 p.m. right now, boom, we'd win, because the market's already 7 points higher. It's already true. This statement is already happening. Does that make sense? What about this one that's priced at $68? Well, this statement is the market to be over 0631. Right now it's greater. Now right now it's at 0634. It's already in the money. Like it's already a true statement. As long as the market stays where it is or goes up, or even if the market comes down a little but doesn't come all the way down here, this will still win. So it's not priced right at 50 bucks, because it's not a 50-50. It's priced a little closer to 100 because it's already in the money. It's already a true statement. So that's called an in the money binary. Does that make sense to everyone? Why that's called an in the money binary, why it's priced a little higher? Because the market's already above that. It's already a true statement. Okay? Now, Look at this one that's only priced at $20. Why is this one priced so low? It's priced under 50, meaning we know why the one was priced at 75, because it's already up there and winning, like it's already true. We understand the at the money, why it was priced at 50, because it's like right there. It's kind of 50-50. But why is this one only priced at 20? It's only a $20 risk. Well, because we're saying that the euro dollar has to be above 0.643. Right now it's only at 0.635. So the market has to move up, right? The market has to make a move for this binary to be worth anything at expiration. Does that make sense? It's out of the money. The market is below. So if I was to buy this, yeah, granted, I'm only risking 22 bucks. Ooh, and I could maybe make 78 bucks if it expires in the money. Okay? But it has to move way up. So the only reason I'd ever want to buy or sell a cheap out of the money binary is if I was expecting movement. Okay? I'd have to expect movement in my direction. Okay? So unless I know and I have an expectation of some movement coming up, I really wouldn't want to be buying an out of the money binary or selling an out of the money binary, right? Because it has to move. Okay, so that's what an out of the money binary is. That's what an in the money binary is in general. Okay, so let's take a look here. So what is one thing that I could do? Let's take a look at this right here. Let's just say, all right, so we understand what an out of the money binary is. Let's look at this chart right here, or this quick example. See this strike right here, the 76.04. Well, I could buy this for $18.75, right? And how much would I be risking? $18.75. Look at this strike right here, 75.89. I could sell it for 85, which means what? Well, if I'm selling, it's the opposite. So my only risk is the difference from where I sell to 100 bucks. So I'm only risking about 14 bucks here to sell this one. So let's say that on the Aussie dollar, let's say there was some news coming out and I was expecting a nice good move on the Aussie dollar, but I don't know if it's going to go up or I don't know if it's going to go down. I don't know which way it's going. What could I do? Well, I could buy this one for $18.75. At the same exact time, I could sell this one and risk about 14 bucks here. So I'd be risking about $32 or $33 total, right, to get into this trade, because I don't know which way it's going to go, up or down. So I'm going to buy a cheap one and sell a cheap one and see which way the market goes. Okay, so this is an out of the money binary strategy. It's what we call a strangle. All right, we don't have to have a stop loss. It's very low risk trading. What we're looking for is a 1-to-1 risk reward ratio. Okay, so quick chart example here. Don't get overwhelmed by this chart. I'll show you where you can go get more information about exactly what I did here. Okay, on this particular example here, all right, see these boxes? This is what we call our expected range indicator. This kind of shows us the expected move of the market for this time period. Each one of these boxes is a 20-minute period because I was trading 20-minute binaries. Okay, so I can look ahead and know, hey, the market's not really expected to go past this point or below this point here. I'm also looking at this expected volume indicator here. See this yellow line? That is historically the volume level for this time period. But the blue shading is the actual current volume, what's happening. So if I'm trading right now, I can look back going, hey, all right, the market's not really trending. It's not going straight up. It's not going straight down. The market's been kind of zigzagging up and down, but I've got some high volume going on. So I know the market's moving up and down, but I don't know which way it's going to go, just like a news release, for example. So if I want to come in here and start trading, I say, okay, look, I'm looking back at the last period. I see the market coming down and then up, up, and down. I've got some volume exceeding. So right here, if I was trading live right here, what is something I could do? I wasn't sure where the market was going to go. What could I do when this 20-minute binary opened up? Well, what did I do? I sold one for 86 bucks. So that means I risked $14, right? Okay. So I sold one down here, saying that the market was going to go down. I also bought one for $15.50. So I bought one way up here. So I bought and sold a cheap one, risking about 14, 15 bucks on each side. Well, what did the market do? Boom, I got in, market went way up, right here. So at the time of this screenshot where I took this, the market was up here. So what was happening? The one I sold, because when I sell, I'm saying the market's going to go down here. Well, it's worth nothing, because the market didn't go down, it went up, right? So it's worthless. I lost 14 bucks on that side. But this little cheapy one I bought up here for 15 bucks, it's now worth 70 bucks. So I'm up in my P&L, my profit and loss, I'm up $54.50 of profit. Does that make sense? Now, technically, did I make $54 on this trade? No, because I lost 14 on this side. So I got to subtract that from this. So I made about 40 bucks. Okay, does that make sense? Because I wasn't sure which way the market was going to go, so I bought a cheapie and sold a cheapie. All right, and I let the market move. With this particular strategy, we're pretty much expecting to almost always lose on one side of the trade, but make up our money on the other side, because we don't know if it's going up or down. Okay, we don't know if the market's going up or down, but we know it's going to move. So we're expecting to lose on one side of the trade. Okay, William, I'm a little confused on the selling part. How is $14 and the bid price is 86? Because it's the sell side, William. Okay, it's the sell side. When you buy a binary, okay, all right, this is the buy side, this is the sell side. If I buy a binary for 88, okay, I'm buying it for 88. Whatever I buy for is my max loss, okay, and the most I can make is the difference between where I buy and $100. If I sell it, my max loss is the difference of where I sell it compared to $100. Okay, does that make sense? So on the sell side, whatever you sell for is your max profit, and the risk is the difference of where you sell compared to 100 bucks. Okay, does that make sense? So like you see these that are like that I can sell for like 89 bucks. All right. So, or like this one, 92. If I was going to sell that, my max loss is only 8 bucks. Okay, so just keep that in mind. That's the difference of the buy and sell side. So that's why I bought a cheap one for about 15 up here, and I sold this one for 86. So my risk was only a difference of 86 compared to 100, so 14 bucks. Okay, so now again, keep in mind, I can't see any of this right-hand side of the chart when I'm trading live, right? I'm right here. But all I know is the market is moving up and down, and I got volume. So going in, I'm going to buy a cheapie up here, risk about 15, sell one down here, risk about 15, see what happens. Okay? And when I'm up, I want to get out. What would have happened if I'd have left this trade open? Okay? And it came back down right here and then expired, and expired right in the middle. Would I have made money on either one of these? No. Right? Because yes, the market went up and this one was profitable, but then the market came back down and expired right in between them. So neither one of them would have been profitable. That's why with this particular strategy, you always want to get out early. You do not hold till expiration. You get out of the trade early. Okay? Let me show you a different one here. This is the same day, a little bit later on the Russell. Same thing. Got a lot of volume going on. Market coming up, down, up, down. So I got in a trade right here. I sold one for 83 down here. So I risked about 17 bucks. This one I bought up here for about 25 bucks. Well, the market didn't go up. It went down. So this one I bought for 25 bucks, worthless. But the time of this screenshot that I took here, this one was up 64 bucks in profit. Okay, so yes, I got to take away the 25 I lost on this side, so I made about 40 bucks. Okay, now, real quick here, and I'm going to show you where you can get some more information on this. All right. No, Ramel says, can I do this all the time, even if there's a little bit of movement? No, because you want to have movement. Otherwise, you won't have enough movement to make this profitable, and you'll just be throwing away 30 bucks, 30 bucks, 30 bucks. Okay, and no, I would not use these for weekly trades. The market does not move. I mean, it's built into the price of those weekly binaries, John. I much prefer to do these on smaller time frames, hourly or 20 minutes. I like it on the 20 minutes. Okay. Let's see here. Andre, if it goes down and you win 14 but lose the 15, you would still be down 1. So does it work better when the price goes up? Okay. Andre, I think you're really confused there. If the price went down, I wouldn't win 14 or 15. Okay. I'm buying this one for 15, hoping the market goes up. I'm selling this one with a risk of 14, hoping it goes down. Okay. I'm not going to win 14 or 15. Okay. That's not how a binary works. The point is, the way you want to, I'll show you a video where you can get a little more information on this. All right. And you might want to go back and kind of catch up on some of the basics of binaries to kind of understand why we're doing a buy and a sell. But I would not win 14 or 15. Okay. So yeah, if it went down, you would get 86. That's correct. If I held it till expiration, but I'm not going to hold it to expiration. I never hold till expiration on this. All right. I'm just looking for a one-to-one move. What does that mean? Well, in this example I gave you here, at the time I took this screenshot, the market was way up here. And I took this screenshot showing I was up 54 bucks. Now someone could say, oh, well, that's awfully convenient because look, the market went down and at expiration expired right here and you would have lost on both of them. That is true. But I'm not going to hold till expiration. How do I know when to get out of this trade? Well, what did I risk total on this trade? I risked 14 on this side and 15 on this side. Say about 30 bucks, right? So my total risk was 30 bucks. So the market didn't go down, it went up. So when this says plus 30 on this trade, does that mean that I risked 30 and now I made 30 so that I'm up? No, because I'm losing 14 on this side, right? So once this says plus 30, then I add 14 in. So once this says plus 44, okay, then I would have made money, correct? Because I risked 30 and I'm going to technically end up making 30. Does that make sense? I have to find out what my combined risk is plus my risk on the other side. And as soon as my P&L gets there, then I'm going to get out of that trade. I'm not going to hold it longer. I'm not going to hold it to expiration. Okay? So that's how I determine how to get out of the trade. So I'm not going to hold it till expiration. All right? I'm just looking for a one-to-one risk-reward ratio, meaning if I'm risking 30 to do this trade, I want to net 30 and get out of the trade. And that's it. I'm not going to try to hold on longer and be greedy about it. Okay? I just don't know which way the market's going. Let's just say it's a news event. I don't know if it's going up or down, so I'm going to go both ways. And I'm going to risk 30 or 40 to make 30 or 40 and get out. Okay? And yes, I'm going to try to get Riza, which level do you choose? I'm going to try to get as close as I can to where the market is, but I'm not going to risk more than 20 bucks on each side. Okay? So that's what we call a strangle. All right? So let's see here. Is it possible to make the same trade and make it worth $1,000? Prefer the sell side? Well, you can do as many contracts as you want. I mean, that example I gave you there, or this example, that's just doing one contract each. You can do 5, 10, 50. I mean, you can do as many contracts as you want. Obviously, you got to have the risk tolerance for it and the account size to do it. But that was just an example of doing one contract. Okay, you can do as many contracts that are as available. So that's what we call a strangle. All right. Let's see here. Sharon says, so with most news trades, you always take the 20-minute trade. No, not always. I mean, the 20-minute binaries are my favorite ones to do the strangles on, but I will do them on the hourlies as well. Okay, I very rarely ever do them on the dailies. I'll do them on the dailies if it's a huge news event, like maybe like a Google earnings release or like a huge earnings release like that. Otherwise, I mainly like to do them on the 20-minute binaries or the hourly binaries. Okay, so if you go to the apexinvesting.com website, go right here under Binary Essentials. Third one down is Trading System Courses. Right here, Binary Strangle. Okay, so that was the first one. We're going to have to move on to the next one now just for time's sake. But if any of you kind of liked what you saw there and like, hey, I really like that strategy, I want to know more about that, I have some questions, just go right there and watch Binary Strangle. Okay, because that's what we just did there, was a binary strangle. So that's where you can go for some more information about how to do the strangles. Okay, let's talk about the same situation. A news event's coming out. We're expecting a pretty big move on the market, but I don't know which way the market's going to go. Is it going to go up or is it going to go down? And I'm a spread trader. I trade Nadex spreads. Let's look here real quick at Nadex spreads. I want to show you something here in just a minute. So we've got just a few minutes before some new spreads come out. This is what we call a straddle. Kind of, we're straddling the fence. All right, we're straddling the market on both sides. We're going to buy an upper spread close to the floor. We're going to sell a lower spread close to the ceiling. Okay, now the market must move enough for us to cover the premium and the loss on the other side. Okay, and that's the problem with these news events, is a lot of people say, oh man, I like this straddle and I like that little cheap strangle trade you showed me. And someone even asked, hey, can I just do this all the time? Or does it have to be when movement's right? Well, it's got to be when there's movement. Otherwise, hey, I bought one for 15, I sold one for 15, I risked 30 bucks. The market didn't move, I lost 30 bucks. Now I did it again, I lost 30 bucks. You can't just go randomly do these. Just because they look cool and they're really cheap to get into, it's really low risk, you can't just randomly go out there and do these. You have to do them for a reason. You have to do them because there's a big move expected, okay? The market has to move enough to cover them. Otherwise, you're just going to be tossing out money, all right? You're totally gambling, okay? You're literally just gambling or going off gut unless you have a reason behind it, okay, of expecting a move. So keep in mind, these first two I'm showing you, the one I just showed you, the one I'm showing you now, we're only using these when there are big moves expected. Okay, and yes, they're very low risk trades, and yes, Arnolfo, like you just asked, yes, you can do multiple contracts. Okay, so I want to show you here. Let me just pull something over real quick here. Let's take a look at spreads. If you've been on with this before, when I've talked about Nadex spreads, you've seen this and you'll understand this. Let's pull up spreads real quick right here. Go to euro dollar. All right, these spreads right here were from 7 p.m. to 9 p.m. So they started at 7, they end at 9. Okay. Notice there's 3 different spreads. Okay. If you've been on with us before, you'll know the answer to this question. At 7 p.m. when this spread opened, when these new spreads opened up, without looking at a chart, without looking back an hour at a chart, where approximately was the euro dollar at 7 p.m.? Can anybody tell me that? How can anybody possibly know where the euro dollar was an hour ago without looking at a chart? How can you tell me from this screen where was the euro dollar at 7 o'clock tonight? Exactly. It was at 0640. How do we know that? Well, the way that spreads work, it's 3 different spreads. Right at 7 o'clock, whatever the market was at, okay, which was 0640. Now remember, these spreads are 100 points wide, okay, 100 points wide. So 0640. So at 7 o'clock, when they're determining the new spreads for the next 2 hours, what they're going to do is they're going to say, okay, the market's at 0640. So we're going to make a spread that's at 0640 going down 100 points to 540. See that? We're also going to make a spread, so the ceiling is 640, the top. The floor, which is the bottom, is 540. We're also going to make a spread that also is 640 is the bottom, going up 100 points to 740. So we're going to have a spread that 640 is the ceiling. We're going to have a spread that 640 is the floor. Then we're going to have one that's right in the middle, where 640 is in the middle. Does that make sense? So where's the market at right now? 0633, 0632, right in there, right? Well, guess what time it is? I'm going to refresh. Forex spreads. Guess what? Look at that, 8 to 10. Right now it's 8 o'clock Eastern time. We just had some new spreads open up, and I think they determined them 2 minutes before, the market would have been at 0630. Now it's at 0633. So boom, look at that. So what do we have here? We got these new spreads. So let's say some news is about to come out. I don't know which way it's going to go. I don't know if it's going to go up or if it's going to go down. What could I do? Well, the market may go up, the market may go down. But I know where the market is right now, right? So I could buy a spread and also at the same time sell a spread. I could straddle it. I could go on both sides. Does that make sense? So what would I do? Well, this one is 0630 going down 100 points, right? So I would want to sell that one, correct? Because I'm at the top of a spread here going down. So I'd want to sell that one in case the market went down. Well, here I could go in and I want to buy this one, right? Because 0630 is the bottom of the spread. And so in case the market went up, I could profit. So I have 2 spreads. And where do they both meet at? At 0630, right? So the spreads meet right here in the middle. So I want to buy this one in case the market goes up. I'm going to sell this one in case it goes down. That makes sense? That's a straddle. News is coming out. I'm expecting the market to move. I don't know if it's going up. I don't know if it's going down. So I want to be in on both ways, straddling it. So that way I could take advantage of that. Either way it goes, right? So when I sold this one, okay, what was my max risk on it? I think it said $6, right? I sold this one. Hold on, let me pop this one back up. So if I sold that one, yeah, $6 risk. Okay, and I think my risk was $10 on the other one, right? Because there's a couple points of premium in there. So I just entered this trade. I'm not saying do this trade right now. There's no new. This is an example. But I just did this trade right there. What's my max risk? What's the most I can lose if nothing happened? $6 on one and $10 on the other. $16. Correct? Everybody follow me there? Does that make sense what I just did there? Okay. So I'm in the trade, and I've got a spread that goes up 100 points or down 100 points. So I can make $1 a tick all the way down. If the market went down 100 points, cool. I can make $100 here, and then I'd lose $10 on this other side because this one was not profitable because the market didn't go that way, right? So, but the market has to move enough. Let's say that the market goes down, and it goes down 16 points. That means I'm profitable $16 on this spread. But remember, I've got a $10 over here. So I'd really only make $6. So what I first of all have to do is I have to make up what my risk is for both sides, then make money. Does that make sense? David says you could only lose both if the market didn't move at all, correct? That's pretty much right, David. Yep. The market would have to really do nothing for me to lose both. But just remember, if it goes one way, that means I've totally lost the other side. So just because I make a certain amount of profit here, I have to deduct what I'd lose on the other side. Does that make sense? But now, so what if the market just does nothing? Maybe it goes up. What if the market goes up 4 or 5 points this way, then down 4 or 5 points, and then down 4 or 5 points this way, and then up 4 or 5? What if it just kind of teeters back and forth, and I'm like really not making much anywhere? My point is, no, this is not another thing where, hey, can I just randomly do that? Just every time a new spread opens up, I'm going to buy one and sell one. It's only $16. Yeah, but what happens if the market's range bound? It's going up 5 or 6 points, down 5 or 6 points. We're like, well, I was up $3 on that side, and then I was only down 7 on this, and then it ended up, oh man, I ended up losing about $12. Then the next hour I did the same thing, and I was down another $15. This is not a strategy just to randomly go do every time there's a new one that opens. All right, just like the previous one, this is a strategy for big moves because you have to make up your risk, and you have to make up your risk on the other side. Okay, so you do again have to have movement in the market. Okay, Michael, what if it goes down then rallies? Could you win twice? Well, only in a sense, Michael. Let's say the market went down 50 ticks. So you were at that time you'd be profitable $50 on this one. But what if you didn't close out the trade and take that $50 profit? You left it open. Then it came back up 50 ticks and expired right here in the middle. Then you still lose on both sides. But yes, let's say it came down and you were up like $50 and you saw the market kind of start to hesitate and you got out and you locked in your $50 profit on this side. And the market happened to come back up and go back up this way 30 or 40 ticks. Yes, this is still open, so you could have made money on that side too. Okay, absolutely. All right, you can totally do that. Okay, as long as that other side's still open. All right. David says, or you may have already bailed on the opposing trade because you don't know it's going the other way. Well, David, that's not really the case because you wouldn't have bailed on it. Because if you've only got $10 of risk here and the market went the other way, there's really no way to get out of this side. You're still in that because no one on the other side is going to buy it back from you. Does that make sense? Because it's kind of worthless. So you've only got like $10 tied up in it. You know what I mean? So you really wouldn't have gotten out of it. You know, it's like if you bought a binary for 15 bucks and the market went the other way, then it's worth zero. Like no one on the other side is going to get you out of it. So you could still be in it. So yeah, if it came back the other way, you could. Okay. RB says, okay, if both of these strategies work with big moves, what compels you to use straddle spreads versus strangle binaries? Well, RB, it's honestly, it's a couple things. First of all, it's really up to you, meaning, you know, we have a lot of people that only trade Nadex binaries. They don't understand spreads and they don't really like to trade spreads. We have some people that are like, I hate binaries. Well, I don't like binaries. I want to trade spreads. I'm a spread trader. I like to trade directionally with the market. I like to imitate and mimic the market, moving up and down tick for tick. Okay, so that's kind of why I was showing both of these. So that way it's more of, hey, if you're a binary trader, here's a way you could do it. If you're a spread trader, here's a way you could do it. Okay, so it's more of showing you how to do it with either one. It's not necessarily, you know, that one is better than the other. You know, the one thing I can say is, you know, now Grant, okay, there's another way to put it too. We do also have some people that trade both binaries and spreads. And you may find at times where there's a certain news event coming up where, you know, you couldn't quite find the binaries that you wanted. You know, the binaries were priced a little too high. You couldn't really get 15 or 20 bucks on both sides. You just weren't really comfortable with it. But there was a perfect trade. There was a perfect straddle here with spreads. Okay. Or you got into it a little late on the spread side, so you couldn't find one in the middle of the hour that was right close to the ceiling or floor. You know, it's really more, I can't really tell you one's better than the other. It's just more, are you a spread trader or a binary trader? Okay. So again, big news event, we know it's going to move. We don't know which way it's going to move. There's two ways that you could take advantage of that right there. There's one way with binaries. Here's a way with spreads. Okay. That's what we call straddles. All right. So now here's the thing to keep in mind is most news events are not going to move enough to do either one of these two that I just showed you. There are some big news announcements. All right. Yes, there's plenty of times during the week to do these trades. There's plenty of times even without news to do them just when you see the market's volatile. Okay. Those straddles are great and they're easy, but you have to have the right move. You've got to pay attention to the news calendar. All right. I can't tell you how many times I've seen it where somebody will hop on over to our news calendar. Okay. And right here on this news tab, news trading plan, what's the next one? Iron condor versus straddle. Okay. Calculator. Because I can't tell you how many times I've seen people on our news trade plan here go, oh, look, you recommend an iron condor right here. So that means there's a news event coming out. I'm just going to do that straddle thing. And every single time you lose. And why is that? Because an iron condor is totally different than a straddle. An iron condor, we're not expecting a big move. We don't want a big move on an iron condor. We want the market to stay as flat as possible. So when we're recommending a trade with a strategy, a flat range-bound strategy, and you're going in doing a straddle with a big move, you'll wonder why you're losing. Okay? We do put it on the calendar. We do at times put straddle or strangle when it's the proper news event. Okay? So don't just randomly do it. Historically, if that news event has a historical move to it that moves the market, we'll put straddle or strangle. Okay? But if it says iron condor or butterfly, that means it's not a big expected move. So don't just randomly go in there and start doing them. All right? So if you want to check out the straddles, check them out, watch the news calendar, demo trade them, okay, and check it out. Kelly says, when spreads first become available, there should always be a bid and offer price there and available again. Absolutely. I mean, normally you can find the spreads anytime. Okay. Normally you can get into this to a spread anytime, but as far as finding the right spreads for the straddles, there's one thing we always know is that with these like 2-hour spreads, for example, we know that at the top of the hour, a new spread's going to come out, and you're always at the top of an hour, always going to have one that is right at the floor and right at the ceiling, because that's just how the spreads work. Remember when I was showing you that, and I said, and guess what? We just hit 801, boom. And remember, the market was like at 0633 at the time. And I was like, boom, there's our 0630 ceiling, 0360 floor, boom, boom. Remember? Okay, so we always know at the top of the hours there's going to be a new set of spreads coming out. So no matter what, I mean, yeah, the market can move between the hours, but we always know at the top of the hours there's going to be a new set of spreads that we can get in right at floor and ceiling, always, because that's just how they determine the spreads when they open them up. We also know with Forex pairs, for example, that right at 6 p.m. there's going to be 4-hour spreads the same way. And then at 11 p.m. there's going to be the 11 to 7s the same exact way. Okay, so no, Kelly, we're not to condors yet. We're talking about straddles right now. We'll get to condors here in just a few. Okay, so all right, so check those out, demo those. So smaller moves. Okay, news events that don't have a big expected move. Okay, we don't expect a big move. It might move the market a little bit. It might not move the market at all. The market might stay flat. All right. How do we take advantage of that? How can we still make money when a market is not moving? Okay, well, that's what we call collecting premium. All right, the first way we do that, so we're totally shifting gears here. This is not where we expect big moves. This is where we are expecting very little moves or no moves. How do we do that with Nadex binaries? Well, that's what we call a butterfly. All right. In the money binary. Remember we talked about in the money binaries, right? We talked about in the money, out of the money, and at the money binaries. So let's just take another look here. This right here. Binary statement, euro dollar to be greater than 1.0629. Well, where's the euro dollar right now? 0635. So right now, is the euro dollar greater than 0629? Yes, it's already greater. So the market can, if I buy this, the market can keep going. If I bought this and the market kept going up, would I win or lose by 10 o'clock? If it kept going up, I'd still win, correct? What happened if the market just went flat, stayed right where it is? Didn't do anything, just stayed right where it is. Would I win or lose? Well, I'm saying the market will be above 0629. It's already at 0635. So if the market stayed flat, I'd still win. What if the market went down 4 points and it went down to 0630? I'd still win because it's still above 0629. So I've got a lot of options with this in the money binary, right? I've got a little room. So let's say that we had a chart like this. Don't get all overwhelmed. I'm just going to show you something quick here. Look at this expected volume indicator. Remember the other strategy I was showing you where the blue was just shooting past it like crazy? There was a lot of movement with the market, right? Well, what if I have a day where there's no volume and see, remember these squares, the expected ranges? See how the markets started here ended here. Started here, ended here. It's not busting out of these ranges, is it? There's not much going on. Well, what if we have a news event that does not have a very big expected move at all? Like historically, the markets are flat. Or sometimes there's news events where, hey, before the news comes out, like 30 minutes to an hour before the news comes out, the markets go flat because no one wants to trade because they're waiting on the news event. So we're expecting the market to stay what we call range bound, meaning to stay in between a certain range. We don't expect a lot of movement from the market. So if I were to look at these boxes ahead of time going, okay, the market is not expected to move past these. If I were to buy a binary right here for 80 bucks, because remember, when a binary is priced at 80 bucks, it means the market's above where I'm buying the binary, right? That's why it's priced so high. So if I buy a binary, let's say right here for 80 bucks, what am I saying? I'm saying that right here at expiration, the market will be above this level, right? Does everybody follow me there? If I spend 80 bucks and buy a binary right here, I'm saying the market will expire above here and in the money binary. If I sell a binary up here, risking 80 bucks as well to make 20 bucks, what am I saying? I'm saying the market will expire below this level. Right? Everybody follow me? So if it's a range-bound day, flat day, a news event where nothing's moving, what happens if I bought a binary down here for 80 bucks? That way I can make 20. And what if I sold a binary at the same time, sold a binary? Don't get this confused with what we covered earlier. Earlier we were buying up here. Now we're selling up here. So I want to buy for 80 bucks here, saying it'll be above here. I'm going to sell, risking 80 bucks here, saying it'll be below here. So if the market expires in the middle, I win on both sides, don't I? Because I was right on my buy side, boom, made 20 bucks. I was right on my sell side, boom, made 20 bucks. Does everybody follow me there? I'm buying an in the money binary down here, and I'm selling an in the money binary down here, saying the market will be above this level and it'll be below this level. So I want it to be in the middle, and I win on both sides. That's what we call collecting premium. Okay. David, I have no idea what you mean by higher risk and lower reward. It's absolutely not. What do we know? If the market is right at, if the market price is currently right around a strike price, what do we know a binary is going to be worth approximately? We covered this earlier. An at the money binary. Around 50 bucks, right? Right? Exactly. At the money binary, around 50 bucks. Okay? So, what do we have to risk here? I've got $80 risk here, and I've got $80 risk here. But if I win on both, how much do I make? About 40 bucks, right? Okay. So in one of our last examples, we were risking 30 or 40 bucks to try to make what? 30 or 40 bucks, right? We want to keep a 1-to-1 risk-reward ratio, correct? If I only have the potential to make 40 bucks, I only want to risk 40 bucks, right? Okay. So I've got $80 tied up here and $80 tied up here. Well, let's say I'm wrong and the market goes, boom, starts to go up. What happens if the market moves up here and it hits this binary strike price that I bought or that I sold. Remember, I sold this with a risk of 80 bucks. But if the market comes up here and it hits that strike, I'm going to get out. And what am I going to get out for? Approximately what? Because if the market hits my strike price, that binary would be worth about what? About 50 bucks. Because what do we just say? If the market price is the same as your strike price, the binary is worth around 50 bucks. Right? So I had a risk of 80, sold it for 20. I sold it for 20 bucks, which is an $80 risk. The market price came up there, so now it's going to be 50 bucks. So I lost 30 bucks. Right? And I'm going to close out the other side. So I'm only risking about 30 bucks on this trade to potentially make 40 bucks. Okay, some people are saying 20 bucks. Where did I maybe lose you here? I want to make sure we clarify that. Does that make sense, David? Okay, because yeah, at first you're freaking out thinking, man, you're risking 80 up here and you're risking 80 here and you're going to only make 40? No way. Right, but if the market came, okay, let me say it differently. If I bought for 80 bucks here, the market came down, boom. This binary that I bought for 80 bucks is only going to be worth 50 now if the market price hits that same price, right? So I'm down 30 bucks. And if that happens, boom, I'm closing my trade right there. I'm getting out at the strike price. I'm only risking 30 bucks. At the same time, I'm going to close my other side. But guess what? The market, that side started to make money already, didn't it? Because the market was going down. So I lost 30 here, but I probably made 10 or 15 back already here, and I'm getting out of the trade. And I really only lost probably 15 bucks. So my risk was about 15 bucks to have a potential reward of about 40 bucks. That make sense, David? I understand your point at the beginning of, man, you're risking a lot. Actually, you're risking very little when you follow the rules like that to get out. Okay? And that's what we call a butterfly. Okay? And yes, exactly. You got to remember that you're not holding to expiration. You can get out at any time. All right? We're not holding these all the way to expiration all the time. Okay? A lot of times we're getting out early and taking what profit we got. And we're never, ever, ever holding an in the money binary to expiration because you got an $80 risk. Okay? So you want to be able to get out of it. So got to keep that in mind. All right, so that's what we call iron butterflies. Okay, so if you're on the Apex website here, okay, and if you want to learn more about that, right here under the Binary Essentials tab, the third one down, Trading System Courses, Binary Butterfly Course. Okay, because we got to move forward here. We're running way over. If you want to learn some more information about that I just showed you, you can watch it right there, Binary Butterfly Course. Okay, so that's how we're collecting premium, meaning there's not movement in the market. The market's very flat, but how can I still make money in a flat market? Well, that's how. You can do in the money binaries, a buy and a sell, to try to make 20 bucks or so on each side. Let the market expire in the middle and just let that time work in your favor and collect it on both sides. Okay, so that's how we do range-bound trading with binaries. Okay, now I'm going to talk to you about how we can do range-bound trading with Nadex spreads. This is going to be a very, very brief overview of iron condors. It's not going to be in-depth training. Like I said, we've got a special event coming up here that I told you to watch us on Facebook for, where we're going to do some special training on iron condors and a new advanced iron condor as well. Okay. Give me just a second to look at a question or two here. Yeah, Kelly, on the iron condors, your question there, yeah, there'd be times you're not going to always find them. Sometimes the markets move so far that you're only going to find a bid or offer on one side, you know, and it's just not going to be there. I mean, just like on binaries, you know what I mean? When something's so far out, there's only a offer, not a bid. Okay, so yeah, in that sense, I would not enter one side and wait. You want to be able to do both sides. But yeah, sometimes you will find that they're just not always there. Just like doing the strangles with the binaries, they're not always there at the right price. Sometimes it's due to the market moving. Sometimes if it's a big news event, it could be because of the volatility and the pricing. When the spreads first come available, there should always be bid and offers on the spreads. Yes, there will always be bids and offers on the spreads when they first come available. Does not always mean, though, Kel, that there'll always be the premium that you want and you need in there to do a condor, okay? But they'll always have a buy and a sell price available. That makes sense? Let's see here. Yeah, Josh, if you're using the scanner and you don't always see the premium there, then yeah, that's kind of exactly what Kelly was just asking. You're not going to always be able to find them. Okay, most of the times you can, but sometimes, you know, if you don't have sometimes they're not there. If the premium's not there, then yeah, you don't want to do it. You want to make sure that it matches up there. Okay. You know, no more than 30 to 20. Please start the spread or later when. Raphael, if you let me cover condor so everybody knows what we're kind of talking about here. Then I'll try to cover some of that. Okay, you don't always find the premium you need there. You don't want to get in too early. That's why we always recommend, like on the news plan, it'll say get in as early as. And if you're not finding it right then, yeah, you can keep an eye on it over the next, say, well, however long, you know, especially, you know, if the news is coming out at 10 and we say you can get in as early as 9, well, the premium may not always be there at 9. Sometimes it is, sometimes it isn't. You know, it might not start to show until 9:30, 9:45 as we're getting closer to that news event. Just because the news calendar says you can get in as early as, that's just saying that's the earliest you'd want to get in. It's not always saying that the premium will always be there right then and there. So yeah, you can definitely keep an eye on it to see if you can get that premium there. Okay. So what is an iron condor? All right, first of all, the biggest mistake on an iron condor is people go the wrong direction. This is the complete total opposite of a straddle. So take your mind off of the first two things we covered. First two things we covered are when, hey, we expect a big move from the market. We expect it to move. I just don't know which way it's going to move. So I want to buy and sell, hoping it moves big one way. Okay, that is not an iron condor. An iron condor is, once again, when it's not going to be a big move. We absolutely don't want it to move. We want it to move as little as possible. Okay, so here's an example. Let's say that there's a spread from 600 to 700, meaning the floor is 600, the ceiling is 700. And we're going to say that right now, the market is at 700. So the market's at the top of this spread. But let's say that you can buy the spread for 680. So if the market expires at 700, what is your profit? On a spread, your profit is the difference from where you buy into the spread compared to where you get out of the spread or where it expires. So in that, just quick question right there. The spread is, the bottom is 600, the top is 700. The market's at 700. If I can buy it for 680 and it expires at 700, how much can I make? Well, if I buy for 680 and it expires at 700, the difference is 20. I can make 20 bucks, right? Okay, everybody understand that, right? Simple enough. Okay, Riza's saying 0. I'm not sure where you're coming up with 0 from there. Okay, if I buy for 680, this is spreads, not binaries. If I buy for 680, market expires 700, I make 20 bucks. So let's look at a different example. If there's another spread that is from 700 to 800, so 700 is the bottom, the floor, 800 is the top, the ceiling. So another spread, same thing, market's at 700, but I'm able to sell the spread at 720. The market expires at 700. How much can I make? 20 bucks. Because where I sell it compared to where it expires is what I make. So I sold it at 720, it expired at 700, so the difference is 20 bucks. So, does that make sense to everybody there? Everybody got that? Speak up now if you don't understand these last 2 slides here, just so we can clarify it. All right, perfect. So let's put the 2 of them together visually. Okay? So what did we have? What did we talk about earlier? Especially at the top of the hours, there's going to be 3 spreads, right? Remember that? Let's look over here. Forex spreads. Remember how we determined that the market at 8 o'clock was at 0630. So what do we have? We have a spread right here where 0630 is the top and the spread goes down 100 points. We also have a spread here where 0630 is the bottom and goes up 100 points, right? So let's look at that visually. So right here, 700. So let's say we have a spread where the bottom is 700 and the top is 800. We also will have a spread where the top is 700 and the bottom is 600. Does that make sense visually now? What I'm showing you right here, see this? Here going down, here going up. Do you see it visually there now? Does that make a little more sense when you see it visually? Okay, and you remember how there's different bid and offers, right? You can buy for different amounts, especially when there's news coming out, which means the implied volatility is higher. Well, there can be a little bit of premium built into these, okay? So what an iron condor is saying, hey, there's a news event coming out. Historically, this event does not move the market a whole lot. Or, historically, when this event comes out, the market will pop up 30 or 40 points, but then it'll make a retracement within 30 or 40 minutes and come back down. Well, how can we take advantage of that? Well, again, if there's implied volatility, if there's premium built in, let's say that the market is right now, the market's right here at 700. But I'm able to buy this spread at 680. I was able to sell this spread at 720. So I'm doing both of them at the same time. So if the market expires at 700, I'd make 20 on my bought side and 20 on my sold side. Does that make sense? How I'm making that on both sides, right? Anyone would want to do that. Anyone would want to buy lower than the market and sell higher than the market, right? So that in a nutshell is an iron condor, where we're buying the lower and we're selling the higher. It's complete opposite of a straddle. And what we're wanting is there to be as little movement as possible by expiration so that we can collect that premium. Now, what happens if the market moves, if the market actually does move at expiration? Let's say the market moved up to 720 and expired. Well, where did I sell this one at? 720. Where did it move up to and expire at? 720. So on this one, did I make money, lose money, or break even on this sold spread? Yeah, I made zero, right? I broke even because I sold it for 720, it expired at 720. So the market actually moved 20 points up. I broke even. But what did I make on this one? 20 bucks. Because I can, on the spread, I can only make money to the ceiling of the spread, remember? I can only make money from 680 to 700. So the market didn't stay flat like I wanted. It went up 20 points. So I broke even here, but I made 20 bucks here. So I'm actually still up $20 on this trade, right? What if the market went against me, actually moved up and expired 40 points, like it went up to 740? Well, I sold this one for 720, but it expired at 740. So I lost 20 bucks on this sold one, correct? Lost 20 bucks. That makes sense? But I still made 20 bucks down here. So on the overall trade, even if the market went against me, or went 40 whole points, I'm still break even, right? So if I were to win on this trade, both sides, I could make 40 bucks. So if you want to talk about a 1-to-1 risk-reward ratio, that hey, if I'm going to make 40 bucks, I can risk 40 bucks. So where can the market go for me to still maintain a 1-to-1 risk-reward ratio? It can go all the way up here to like 780, right? So do you see how I have a big, and that's just on the sold side. The market could also go way down here on the buy side, and the same would hold true the opposite way. Does that make sense? So with an iron condor, you have a huge area, a huge area of letting the market move and maintain a 1-to-1 risk-reward ratio. It really opens up a lot of doors there for you, because we're doing these with news events that don't normally make the market move much, or where the market moves and then comes back. So it gives us a really wide gap to be able to maintain a 1-to-1 risk-reward ratio. Okay, does that make sense? So where we want the market to do as little as possible so we make the money on both sides. If it comes up to here, boom, we still made money. Boom, comes all the way up to here, moves 40 points. We're still at break even. We didn't lose anything. That makes sense? You'd have to go all the way up here for us to lose 40 in our hopes of making 40. That, in a nutshell, is an iron condor. So that's similar to what we just covered with the butterflies, with binaries, where we're selling up here and buying up here and wanting the market to expire in the middle so we win on both sides. Well, if you're not a binary trader and you're a spread trader, that's how we do it with spreads, is you sell the upper spread, buy the lower spread, let it expire in the middle or somewhere in the middle. And even if you break even on one, you'll still profit on the other. Okay. And it gives you a really big area of break even there. Okay. Let's see here. Do you always want to let it expire? You'll make, not necessarily. I mean, you'll make technically you'll make the most if it expires if the market's totally flat. Okay, because you know that premium, you're buying it for 680. You're gonna have to get closer to expiration before the the sell side gets up there as well. You know what I mean? So you do normally make the most at expiration if the market is going to be flat, because it's got to get closer to expiration for that premium to start catching up. Okay, on your bid offer, the way it's listed. Okay, Thomas, yes, it's 750. Yep. Past 740. 740 is your break even. Okay, or down here 660 would be your break even. Okay, beyond that is when you'd start to technically have it go against you. So you've got a really big gap there from 660 up to 740. I mean, that's 80 points of movement overall. And you're still, profitable or break even. Okay. So let's see here. Can I buy 680 and sell 780? So I have a big no, you're not going to get that. You're probably not going to get that much premium in a iron condor or in a spread most of the time. Okay, you're probably not going to be able to get something with that much premium in it up there. I mean, the wider you can get it, the better. You just have to see what's available, but very rarely are you going to have that, except for maybe on some of the gold spreads or NQ, or if there's some big news, you might find something with some big premium in it like that. Okay. So that, in a nutshell, is an iron condor. Okay, does that make sense? So we covered the first two we covered are when we expect big moves in the market. How do we take advantage of that? These last two are, okay, when we don't expect big moves in the market, but we still want to find a way to make some money and collect some premium. So I showed you both those different ways. Now you could do each of them with binaries or spreads. Okay, so just keep in mind, a lot of times, and we kind of covered this, and we'll list it on the news calendar, we'll let you know which one to do. All right. The cost of a straddle is normally the expected move. Meaning a lot of times for those straddles, people are like, oh, let me just do those all the time. Well, there's a little bit of premium built into those straddles, and a lot of times that is the expected move of the market, and you're going to end up just break even or losing a little bit. You have to know that there's a big move coming up. All right, so we very rarely put them on the news plan, but they are on there sometimes. You'll see straddles and strangles. Okay, a lot of times we do have iron condors on there. You can either pay that premium, or collect that premium. Okay, so once again, here on the Apex Investing website, Binary Essentials tab, Trading System Courses, go through and watch strangles and butterflies. Right here under the news plan. All right, there is an iron condor versus a straddle calculator to know which one should I do. Can I be should I be paying premium or collecting premium? Okay, and then right here, the news trading plan. Again, this will let you know the upcoming news, let you know, like I said, there's not a lot of news out there this week because of the short holiday. A lot of times there's several condors a day. Some of them are daytime, some are nighttime, and so on. William, is Apex Investing mostly about binaries? No, not at all. We do binaries, we do spreads, we do stocks, futures, Forex. We have a live trading room, our elite room, which is mainly people doing Forex and futures. There's some spread traders in there as well, but a lot of those are futures traders. We do have a separate section here for binaries and spreads, a little bit of everything, okay? And again, down here, we've got a great video on trading news events and step-by-step iron condors, Okay, now, like I told you, we are going to be having some special events coming up on Black Friday and Cyber Monday. Some special offers, and we're going to be doing some special webinars and some new training on iron condors as far as getting into much more in depth on the iron condors, how to do them, how to manage them, how to use the scanner for them, and as well as a new advanced iron condor system as well. So stay tuned for more info. Hop on over to, if you're not already doing this, we will make some announcements about this event. We will send out some tweets, put it on our calendar, but we're going to be announcing it on Facebook as well. So facebook.com/apexinvesting. Like us on Facebook, follow us there. We'll get that event out with some of the special offers and let you know some of the new stuff we're going to be doing with iron condors and the new training. Like I said, tonight was just a very basic overview. This was a Nadex webinar, not an Apex webinar. So just letting you know some general information about how we trade news events. If you want to learn more about the iron condors, keep an eye on Facebook and you'll get notified of that event and that special event and special offer here for Black Friday and Cyber Monday. Okay, so all right, guys, I will get this webinar uploaded. Once again, if you're on the Apex website, you go right here under Questions tab, Trading Questions Forum, and you just scroll down towards the bottom where it says Watch Webinars Here. And I will have this particular webinar posted right here under Newest Webinars. Give me about an hour or so and I'll have it up and I'll get it posted on Facebook as well. Okay, so guys, thanks again. Let us know if you have any questions. Hit us up over on the Apex site and we will look forward to seeing you next Monday and every Monday at 7 p.m. Eastern Time. William, thank you so much for doing these. I'd be lost without it. Thanks. You're very welcome, William. I'm glad it helped. Hope that helps clarify some stuff. And again, check out the Apex website there for all the other free, completely free, step-by-step training courses, all the different webinars, all the trainings. Check out the forum, ask questions there, ask questions to the help desk. We're here to help in any way we can. So, guys, have a great night. Have a good week of trading. And from all of us here at the Apex Investing Institute team, wishing you and your family a great holiday weekend and a very happy Thanksgiving. All right? Take care, guys.